Yeah.
And good morning, Quasar Markets Live. This is your host, Howard Greenberg. I am here with the man himself, Stephen Big Beat, or CEO and founder of Quasar Markets. Steve, how you doing this morning?
Good morning, Hondo. Those jobs numbers came out and weak. And if anybody out there thinks we are not cutting rates, even after Williams said it now, but most of the members now are saying we're going to cut. We've been talking about this for a while now. It's pretty obvious. We're going to cut rates. And I think the markets are showing that this morning. Yeah, so look, jobs and Fed. Look at that. CNBC already talking about it.
Yep,
Um,
absolutely. It seemed to be a little bit of a nothing bag. We haven't seen a ton of movement here, in since the payroll came out. A couple of things I think will be interesting to watch today. Today is the last day for comments by the Fed officials, so I assume we'll see a run to the podiums today by each of them to put their comments there. So that is something that could spark some volatility today. Do you think that will give us any volatility, or do you think, like you said, everybody pretty much knows it's a quarter point, it's a quarter point, it's a quarter point, and that's what it.
that's a That's very interesting that you say that. I mean, 25 bips coming up, I think it's priced in. And I've said that even since last year, we'll have two cuts this year, and it'll be in the second half of the year, and it'll be 25 basis points each, September and December, the normal ones. There might actually be a 50 bips cut here. I might be changing my tune here.
Oh
Um,
wow, let me.
because yeah, listen, those payroll numbers didn't come in well. Revision, and nobody wants to say, hey, during a election year, and they say, oh, it's not political, but let's be real honest here. People want homes. They're unhappy. The malaise in the markets are pretty high. You see that in some of the selling that we've seen lately. Um, this could very well be between 50 and 75 basis point cut here the next yeah, you're already seeing it. There it is.
Yeah, it was funny. We brought this up the other day. For those that don't know, a great way to judge what might happen or what is predicted to happen, and this is people making money bets. This is where the money is speaking. Is CME Group's Fed Watch, which I'm at right here. You can see
Yep.
the thing, and this has changed. This was at about 60% on the 500 to 525, which would be the 25 basis points that I mentioned. That was at about 68% 2 days ago when I brought this up with you for the first time. So we are definitely seeing a change here. That's a pretty big change, quite honestly. So now
Yeah.
more money based on that bigger cut.
Yeah, and I've been saying this for a while. Be careful what we wish for. If you're having to cut this much, there's more problems in the markets. Now I'm starting to wonder if there's going to be an intermediate cut. That would really shock the markets, and I don't want to see that. I don't think that's going to happen. It's not a smart move for the Fed. But this Fed hasn't been really that smart. And I hate to say it that way, but it's true. They've been behind the curve. I don't care what Messer says. And look, there are two things that they have to do: is get inflation down. They've done that, and they have to get jobs going. They've not done that. And when you look at it from that perspective, they only really have one way of doing things: cutting or raising. And they didn't cut fast enough, and they didn't raise them fast enough, and they raised too much. We saw that with St. Louis Fed President Bullard saying, "Let's go to 6.5. Let's go to the sky," right? And that was too much. That ruined the housing market, and people still were just getting their footing, right? I get it that they were trying to stop, but when your only tool is a sledgehammer to build a house, that's a problem, right? And I think the problem is not the Fed in that aspect. I think it's the tools that they have to do this. They should have more tools, more data, more news, more everything in their hands, and they're in better data, right? Right. They're using data that's old data, stale. They're looking at jobs numbers from last month, for this month. That you're already behind the curve, right? So don't say you're not behind the curve when the data you're looking at is already behind the curve. Um, when I'm looking at it right now, um, I think I had a lot of talk about this yesterday. Is China? So I
Right.
think there's something going on here. I think there's some bigger issues in the works, and we talked about with Japan and the carry trade that really crushed the markets. We saw it. Look at the dollar now. The Dixie is 100.93. It slipped down to 100.6. It was right over the 101 handle up to, but yesterday, look at oil back to 69.50 now a barrel. These are all very, very good indicators of what people are thinking. And we talked about it, silver and gold. Gold right now is 25.18 now an ounce. A bar, a complete gold bar is now over $1 million, right? I mean, that to me tells you what's going on in the markets, that people are not happy, and that we might be a little overextended. But I think there is some good stuff going on out there, AI and things like that. But I'm gonna be honest with you, you're right, Hondo, that this is not the best place to be right now, and we're definitely gonna get some cuts here.
Yeah, you hit on a bunch of different things there. I'm trying to keep up with you. When you talked about it, the market, metals moving up here on this news. Silver actually losing a little bit of momentum since that news, but you've been talking lately. Look at silver in the morning to follow where it's going to go. I'm seeing silver up about 0.7% here this morning. So, are you thinking we maybe see a little bit of green?
I think we see green today. I think the Bears have been in control for the last 3 days. It is Friday. I think it's a reverse trade today. But I'm going to tell you, I think I said this earlier. I'm going to do what I normally do when I don't like the markets. I sit on my hands.
Yeah,
It's an old.
you nailed it. I was going to say that because here's what I think also is we're going to have, and I've already seen that Williams is already speaking, elections don't make the Fed job more difficult. We're going to see them, just line up at the podium today. And as you know, those retail traders, man, they watch that news and they can't get their fingers moving fast enough to sell and buy. So I think we're going to see a lot of choppiness today, personally, out there. So I wanted to touch on that with you. A second couple of things that I've been looking at is, the market to me seems like yourself more focused on economic news when it comes to the forecast about weakening and a recession than 2 or 3 months ago when it was inflation.
Yeah,
Um,
that's a good point. I think I mentioned this yesterday in our own rooms. Look, I think there's something going on here, and I think I got my fingers around it. It's algos. I think there's more algo trading now than there was, say, a month ago, maybe, because I think people are on vacation. We talked about this yesterday. The vacation people trading aren't doing as much. Yes, the volume is down, volatility is up. That usually happens in September and October. This is not unusual. People are on vacation. They're trying to get that last bit in before the sun goes away up north. We don't have that problem down here, but I will tell you this much. I think that you're seeing more algo computer trading than you have in the past. And I think there's a lot more AI computer trading too, as well. So that choppiness right now is being heated by, I think, technical analysis more than right now than the news. Because if you just saw the news with the jobs numbers coming out, you would have seen a much bigger swing. I think they've just flipped. I think they flipped it to the buy side, to be honest with you, but only because the Bears have been in control for so long.
Right. A couple of things I've been looking at is with that change, to me, I usually, I know I'm a one trick pony sometimes. I go back to Peter Lynch a lot because he's, the guy that I read the most about. But this is where I tend to look for a cyclical change. And I think we've sort of seen that happen since mid June. And we're seeing consumer durables, utilities, healthcare, just, the things that do okay during recessions holding up. It's tech getting hit now. Tech's been down. You look
Yeah,
at the Russell, value index. It's been up 5% over the last 3 months, where you see the growth index is down 4%. So for me, I'm sort of in the boat with you, but in a different side of the boat. And that I don't think we're sinking. I just think we're being held up a little bit by the cyclical change out of tech into the other sectors. Tech got red hot, and some smart traders that follow those sectors, like you said, people coming back from vacation said, "Hey, look, I made some good money on Nvidia all summer. I wasn't watching it that close, but man, I did well. I'm going to recycle the right here. I'm going to take a little of that off. I'm going to get some Procter Gamble. I'm going to take a little off. I'm
hmm.
going to buy some Smucker's jam. It's time for winter. Everybody's going to be making, their sandwiches." And so that's what I'm looking at there. But I did have one other question to bring when it comes to sort of macro issues. The other thing I'm noticing is that you don't normally see this. The S&P 500 and the 10-year have been trading both up and down together over the last couple of weeks. Is that something we see a lot? Because I'm not used to seeing that.
Well, correlations in the markets obviously sometimes can be a little wonky. Sometimes they can be dead on, as we've been watching the silver markets and in the U.S. markets. Um, when I look at those correlations, I have to know why there's a correlation. I have to understand that, and our AI a lot of times explains that. But when I look at the markets, for me, a lot of times I have to do two things. I have to say, okay, there's a correlation here, but is there outside influences also? And right now, I think the outside influence right now is, again, I hate to be like a broken record, but it's the summer. It's tired. It's quiet right now. If there was volume behind the volatility, then I would say, yeah, there's some correlation and reasoning behind it. But right now, I think it's just algos and meme stocks and things of that nature. Right now are really taking the brunt of this. Tech stocks have been all over the map. Now, that's an interesting point with the news coming up like this. I do think that there's some interesting news coming out of Qualcomm with these mixed reality headsets. Qualcomm and Samsung and Apple are really pushing the envelope here when it comes to that. So, in the past, tech has got us out of the problems. Tech will get us out of the problems again. And if what I'm seeing right now, this news of mixed reality, I kind of like this, and AI will still be the theme here, and maybe it's mixed reality with AI and VR and all of that together could be one cool products going out. So that might change the game a little bit, and then that correlation will be tech and stocks again, as opposed to tech and silver, shall we say,
Right.
or gold. But yeah,
Well,
I
we
mean,
know Apple's got their big tech day next month, so that would be
right.
interesting to see what they announce. That's always good to spur the market a little bit. When it comes to that, I see Fed Williams, as I said, the speakers can't run to the podium quick enough today. He's just speaking here, says it's time to cut. Yeah, thanks. That's the news that you expect all day. You're going to hear this. And you said that they only have two levers to play with the Fed, which tends to be a problem right now. And as you said, the whole system of looking backwards to decide how we're going to move in the future is a little bit broken, right? I mean, technology and things move so fast today. That might have worked 20 years ago, but I do think we need some forward-looking, indicators to start being used, some, forecasting to be part of the Fed that isn't part of it. But like you said, that takes a mandate from either Congress or the White House, right, to make that type
Yeah.
of change happen. But that's one that I think that where I would defend the Fed. Not that I'm going to defend the Fed, quite honestly. I've been an spoken critic of their things, but I don't know that they have, like you said, the levers to make things actually run in the way that we would like to see. And I don't think they have a mandate to watch or to forecast as opposed to just look at what the past, economic indicators say. And as we know, they've then fine-tuned those things that when they tell you what GDP is or where inflation is, it no longer counts, or it does count, it triple counts this, it half credits that. They've made it where you can't figure out what's going on there.
Yeah, but
Um,
they have a whole team, Howard, to behind them to say, okay, here's what's really going on. Here's what we should be doing. And the Fed itself, the actual members, have been ignoring what the Fed analysts have been saying. So for me, I don't know. I'm not about that. I think they need to listen to their own damn people.
That's a great point. They do have huge teams, and infinite amount of data at their fingertips. So that you would think we'd have that going. We're about 15 minutes away from open here. Two of the three indexes looking like they might open up green here. The Dow and the SPY QQQ still looking a little bit negative here. Nvidia, one of the ones getting hit here today. You think any of this has to do with the insider selling that was announced yesterday, there,
Yeah,
Steve?
100%. If I had known that and the fake news from Bloomberg regarding Nvidia being the DOJ, um, Yeah, look, if you pull up that Nvidia chart and you pull up a 1 hour chart for me, you'll see exactly what I mean. I think they built a base. I think people are looking at this, and I think we go higher. It's starting today, yes, based on the news, but I think the selling in Nvidia is done, and I think we could make a nice run here. Now, for just for everybody's public edification, I am long Nvidia, but I don't tell anybody what to buy or sell or do here, but it's the biggest stock out there that's trading there by volume right now. So, but I am long, and I'm going to stay long. I again reiterate, we don't tell anybody what to do or buy or sell here. We don't make any recommendations. But I will say that there is a good chance we go right back up in Nvidia. We've seen it before. Look at that. One, two,
Yeah.
three bottoms there. I like this. And it's tested the bottoms again. And if you pull up a weekly chart, I think we've actually started to change the whole feeling behind the negativity behind it. There you go. See, I think that we're holding down here, and I think we go right back up. There's
I
really
actually
no,
like that hourly chart you showed.
yeah,
I like how history repeats itself. Again, some of these tech stocks resemble Bitcoin in a lot of ways, is what I trade the most heavily and have traded the most heavily. You got an area where you can see we jumped up from nicely here in beginning of August. Where are we right now, and where have we consolidated? Right around that same spot, right?
yeah,
This
yeah.
could be your breakout to the side. And again, we don't give investing advice, and I am not an expert on tech stocks. But I can read charts, and you read what you see in front of you. My warning there would be my pivot point here, that 102.50. Anytime it gets below there, you do have some significant downside. So you always want to keep that in play. You get downside to 90 from that spot if you do break below that 105.50 area that we looked at. So I tend to like to point out just pivot points and what you're looking at for there. That's what I'm seeing here today with Nvidia. VIX, had been picking up again. Now we see here, since the news there, I think everyone's saying, so now people are disagreeing with me about volatility today. Since the Fed came out and had their news, it looks like the smart money saying maybe volatility isn't coming. We're going to get more directional,
Yeah.
one direction or another today. So following your insights there. So we'll take a look at that. Some things I was noticing that you talked about also in there to bring up, where's some of this money going? Faraday, right? We talked about this. One of these meme stocks that has had repeatable pumps here that you can see that looks just like a crypto stock. If I was looking at this, I would told you this is probably Cardano, and I'm looking at it here in
Mm.
2017 where the spike was, and then it spikes from there. This looks just like a crypto stock had. But this sucker, the other day it did a 200% jump, and today pre-market hours 13% jump there. This is where some of the volume's going. I don't like it for the market. The way that you used to rail on me about leverage in the crypto market and how that was hurting it and causing these great swings. I think that this is a problem that needs to be looked at a little bit more closely. Not getting a lot of coverage. I don't see CNN talk about it ever. I don't see any of the big boys saying, "Hey, these micro pumpers. This is just nothing more than pump and dump." And it's like you're saying yesterday. Who's going to start to look at this? Because this stuff's coming from the Wall Street Bet Reddit groups, the same ones that led to AMC and GME doing what they did. But I personally not a big fan that it's not good for the market.
Let me
Uh,
ask you a question.
yeah,
The cops on Wall Street, SEC, and I'm a big fan of them because I think they do a good job, but they're understaffed, right? They don't have enough tools in the tool shelf to do it right now, and they don't really have the ability to go after these people. And when you do go after them, pump and dumpers, then they're not pushing the envelope there and saying you need to go spend some time in jail. They're letting them off the hook. To be honest with you, put a few of them behind jail and they'll stop, right? Think of it at perspective of FTX, right? Good job on that one. The guy needed to go to jail and
I couldn't
probably
agree with you more there. As it being in DC working on the regulatory side with ABCA, that's the things that I've been talking about. Is as important as it is to get rid of Sam Bankman-Fried, it's just as important to get rid of these YouTube channels that are out there touting the stuff. They're pre-running their people. They liquid,
correct.
the exit liquidity is their their crowd, their consumer, their customers, and that's not good for the market. With that being said, I did see, the other part I would say is the SEC seems to be sort of like the Fed, always a little late to the game. It doesn't really help when you give a $240,000 fine to a New Jersey broker like they did yesterday, but it was for stuff that happened in 2001,
Right.
2002. That's what we're seeing is it doesn't get there quick enough. So I'm with you. While I think that Gensler's war against crypto was very detrimental to U.S. and tech. What I would say is I would like to see that they get more teeth on the enforcement side and that they get more help. There. We are about 10 minutes away here, Steve. Any movers you're gonna watch this today?
Yes, I'm going to be watching Broadcom out there, AVGO, down about
Yeah.
6% on those earnings yesterday. Look, those earnings were good. I'm getting tired of people beating up earnings stocks just because they don't feel like it was good enough. That's crazy. Those numbers were awesome. AI is here to stay, and they told you what the numbers were doing. I liked it down there, and I like this opportunity here too as well.
Can't argue there. Bounce back. Another one getting hit. Chips in general getting hit this morning. SMCI got some more bad news. I saw another downgrade, and the downgrade wasn't based upon anything from the short seller report or anything from them delaying their things. It was more on material issues um, with their building the new chips.
Keeping my eye here right now on, believe it or not, I'm looking at Ripple actually.
XRP, I get that here on our charts for us.
Ripple is flat on the session here, and I say session lightly, as we all know it does stop. But when I look at Ripple here, it's in a serious tight range, roughly between 50 cents to 60 cents, and right here, right in the middle. So it looks to be in an area where it can make a decision here, especially with the SEC. And politically, I think it could be a football as well. But yeah, this is interesting here. To me, it could look like it could push right on up. You can see it's bottom of linear regression. You can see we're starting to base a bit. It could push right back on up.
Yeah, I can't argue here. It wouldn't be a bad spot for a little bit of accumulation. I do think it's going to take itself about another week here to work its way back out.
Could be.
There, I don't think that necessarily it's got the impotence today for it to move. But what I'm looking at here on the daily linear that I like for Ripple that has worked pretty well, held up. You can see here. I would be looking to acquire down as it's approaching the bottom of that linear. There. So I like
And
that one.
Bitcoin giving a little bit of a pump here, or almost back to the 57,000 handle here.
Yeah, I still stay firmly in my situation and my thesis, which is as long as we stay within this bull flag here, I'm bullish. I know that a couple of people in our groups that were a little bit negative on some TNA over the next 3 to 5 days. It's just part of it with Bitcoin is it's not a true TA play. You've got to know what's going on behind the scenes, so to speak. And you got to have a little bit of that insight and say, okay, it does matter that we're now getting towards 4 months after the halving, 5 months. Usually 6 to 8 is when that supply decrease starts to constrict the supply and demand stays the same. What happens? Price
Yep.
still goes up. So all the fundamentals there, and it's also this is where and again, I'm not. I'm a guy that falls not in the Michael Saylor group, but in that group where I do hold 80% of what I hold in Bitcoin and don't
Mm.
sell it, and I trade about 20%, to catch those waves. And part of that is just that, that when it takes off, it takes off. So you always want to have some in your bags, in my opinion. And what's happening is this where you see capitulation from short-term holders. They're the ones that have a little pain right now. But quite honestly, most of the cohorts, most of the different, long-term holders, mid-term holders, or short-term holders is sort of how we look at that. Less than
Yep.
a month, short-term holder, 1 month to 6 month is mid-term, 6 and longer, long-term when we're saying that. And those cohorts in the 6 month and longer, they're in profit. 3 month and longer, they're in profit. The only cohort that's down is the ones that bought at 60 recently.
And I
So
think it's
right now,
important to tell everybody here that you're the president of the American Blockchain and Cryptocurrency Association. I think you should do a show on all the stuff that you know, Howard. And why don't we should do it?
we are. In fact, today at 1:30, it's a good segue. I will be doing a half-hour show taking a deeper dive into Bitcoin as we head into the weekend. On Friday, as you know, the equity markets tend to slow down as those expiries happen in the mid-afternoon. So we do think at Quasar Markets Friday afternoon is a great time to start talking about Bitcoin.
I
So
love
this
it.
starting today, you will have a half-hour in-depth look at what's going on in the Bitcoin market. I'll take a look at on-chain metrics. We'll take a look at those cohorts. We'll take a look at miners. What are they doing? We're going to take a look at the whales. What are they doing? We're going to take a look at exchange inflows and outflows and show you how to take a look at that. Because, like I said, in Bitcoin, it's not just looking at TA. You have a difference between crypto and the stock market. And it's the way the stock market's going to move here. You know, we're at T+1 now, not T+2 anymore. When we actually get to full transparency, we have on-chain metrics, and I'm going to go over today. What are on-chain metrics? When I say that, what am I talking about? What can you see in the markets immediately as they're happening that you can't in the equity markets? Okay, we're 5 minutes away from opening here. As you said, crypto in the green. One of your favorites, Solana, is another one that's up about
Yep.
3% here. I will say, as we talk, you know, the one that I do think will be the next one that we do see ETFs on, without a doubt, will be Solana. I don't even think there's a question there. You know, so Solana's one I'm looking at here, sitting at 133. I'm not gonna lie, I like it better down here at that 120 level. That's sort of what I'm looking at as a spot that I want to acquire. You can see my last acquisition, you know, zone was back here in that 92 to 107. You know, a few months ago, but I definitely another one that I would be looking at here, because what happens is, you know, what you'll start to see is people like myself talking about Solana and ETS now. In about 2 or 3 months, you'll start to see CNN and those guys cover it, and you want to be in it before they start talking about it, because by the time they start talking about it and the retail gets into it again, you're just exit liquidity for those that have been looking at this in advance. So
Yep.
Solana, another one to keep an eye on.
10-year now sitting here at 3.731. Wow, if we close here, it would be the first time that it'll close not inverted in a long time. So that's interesting to me.
Steve, could you, you know, that's a term that's bandied around a lot. I don't think a lot of people really understand that difference. Could you explain a little bit the difference between when it's inverted and not, and what that actually means?
Yeah, sure. Very simple. When we look at the curve, the rates, percentages, so we are looking at short-term rates are higher. So let's say that they're at 4%, and the 10-year, which should be higher because people want to have a longer term frame, they're actually lower. It means they're inverted. That means you are losing money. So we want that. We want the longer term, the part of the curve to go up on this side of it, not be inverted. So yeah, that doesn't explain it to anybody. Let me know. I'm happy to
Yeah,
explain
and I guess
conversion.
what I would ask next is that because of interest rates? Is that
Yeah,
what
of
sort of
course.
leads to this? That's what's causing that?
Well, I think a lot of it needs is the needs of the banks, right? They need money in the banks, and they will raise the rates for short term to get people to put money in the banks to be for those saving people. But our savings rate is at the lowest ever, so you that's why you want to keep those rates high to keep people money in the banks. They're just not doing it. They're investing it. They're doing everything else. Money markets. It's weird right now, and we need to get that corrected, or we could have a worse recession out there.
Yeah.
um, the big bad R word again. I said it again, I guess.
Yeah. One other question I have for you is, how would you make a play on that if you were, you know, someone that said, I want to diversify, but I'm a retail trader and I don't, you know, I don't know how to buy U.S. Treasuries, or where I can. Can you get access to that through a fund? Are there ETFs that track that? How is the easiest ways to do that?
Well, the easiest way is what you already do anyway. If you if you have a job, you're already buying treasuries. Interestingly enough, you're buying it for your Social Security. It's the
Right.
biggest buyer of it, right? But interestingly enough, you can through your bank, through your brokerage. There should be a section that says U.S. government treasuries. Real quickly, we are about to go here we go. We are live now. The
Market's
market
live.
has
Here we go. Okay, let's take a look. SPY at 549.89 as we open up here, trying to get just broke above 550. So SPY trying to move to the upside here. I still see, the key spot for resistance here on the SPY today at 565. On the daily chart. So anything below that keeps us within this same trading range that we've been in, for the majority of the last 2-3 months. QQQ NASDAQ still down a little bit. Although Nvidia going positive here in the morning. I still have up the chart marks that we put in yesterday there. And it's still right in that spot where we were looking for it to make an increased move from. Again, consolidating down in that area. What else is moving for us so far? Market movers. Let's see where volume is. Nothing
that was
hitting
up.
really yet.
Yeah, Nasdaq is green here. Bitcoin, but things are holding here a little bit. Nothing crazy yet.
What's the tick looking like, Steve?
Yeah, we're up about. Oh wow, look at that. Yeah, you're right. Up about 300 here.
So that's starting to move up a little bit. SPY now up 1/4 of a point. Let's go. Man, the only thing I'll say is this just seems so reminiscent of yesterday and the day before. I'd almost like to see a little bit more muted start to the day and see it be a little bit more sustainable than what we've got right here. Tesla moving positive. So the big names that carried us yesterday morning are carrying us a little bit again today. Let's take a look at CRM. Want to see how they're moving
VIX
today.
dropping here. VIX dropping quite nicely here. Yeah, tick up 360 now. Tick up 380 now. We're about to push.
Okay, so we look like we want to push up. Apple again. Only thing that I will warn again is it seems like the same drivers that drove the bus up yesterday morning are driving us again this morning in the same way. I don't want to see history repeat itself.
SMCI down about almost 3% here now as we continue to see sell-off in SMCI.
I have that up here on the chart. You can see if that drops below this 397.45, look out below.
Bitcoin dropping now.
Yeah.
And Nvidia now turning red. Wow.
Yeah, we are seeing. That's what I mean. It's this weird turn. VIX seems to be still dropping a little bit on that.
Dow is pushing up though here.
Dow up over 1/4%, 0.3233. Which more goes to, again, my thesis there that people are cyclically moving into some of these consumer durables.
I just think the problem is right now is that these are algos that are this sharp turn selling, stairs up, elevator down. That's algo trading. Those aren't real people trading like that. They just can't trade that fast.
I have a couple of friends like Aaron that can make it sell that quick.
I'm aware.
Intel, all the semis getting hit here.
My friend Anthony Tony DaCosta is talking about NEO now up 3%, breaking that $5 handle here.
He has always been a fan of NEO, I know that. Got that up on the charts. They did get good guidance overnight, I saw.
There it is, back above the 5 handle once again. Cocoa, good old chocolate up 2.6% there. Cocoa beans been very volatile over the last few months.
Yeah, I don't like to see that one. Chocolate's been too expensive. I'm a fat guy. I like my chocolate.
Yeah. Interesting enough, NYCB, New York Community Bank, up to almost 3% here, 1058 now. That one was almost defunct, actually.
One of the regionals that got hurt. Oil's still below 70 here. I keep waiting to hear that the SPR got restocked, but we haven't heard anything from it so far. Treasury yield dipped a little bit here after the payroll reports.
Yeah, there you go. Nvidia right back up. That's algo trading right in there, and it is what it is. Yeah, there we go. We're seeing tick pushing up almost 500 here. The advanced decline line positive by 1,000 now. That's a very bullish sign on the day. WTI oil now it's almost back in 70 handle there, 69.85. Um,
Well, next Fed speaker says that this report didn't push anybody off. So again, as we all know, there is a cut coming. Okay, what else do we see? Tesla now at a negative. Man, look at that. I mean, it spiked up from 228 to 233, right back down at 228 again. I just don't see the momentum carrying much around. Apple, though, on fire here, up almost a point.
yeah, I mean, I talked about that this morning, right? It's tech, tech,
Yeah.
tech. It's all about whether or not that look at that Nvidia getting smacked again.
Here's my only concern is, you look at this Apple chart on the hourly from yesterday, and you see we took that big jump up in the first hour, and then we gave it back all day. I'm afraid that if we don't break that 224.81 bell, we're looking at the same thing here. That's just, my 2 cents. Seeing a lot more red across finance, health, and technology today. Let's take a look a
But the
little
Dow is
bit.
still pushing higher here, so and
Lily's down about 3.55 here. J and
yeah,
J
there were
down.
other companies out there that are producing that weight loss drugs. So that might hurt Eli Lilly a bit.
You can see that right on our screen here. I got this our screener again. Finance. I can blow. That's what I love so much about the Quasar Markets widgets. As you can see, I can spool it right up. Berkshire down 2.85%. That's an interesting one, Steve.
Yeah, Feds Williams says the path of Fed rate cuts will be driven by data. That's kind of sad to hear that because, quite frankly, their data is bad.
It's
So yeah,
old, and it's old data. Yeah, and they manipulate it too much.
saying that there's still significant tailwinds on supply side of the economy. Hmm. Just not getting enough toilet paper there, Mr. Williams.
Yeah,
Okay.
it's
Broadcom now down almost 8.5% here.
Amazon doing well here this morning.
I
Excuse me,
think
obviously it's
Broadcom,
been dropping.
yeah, Broadcom is again another situation where it's just been beaten up for literally no reason at all here. The selling in Nvidia is still strong. It could be that Jensen is still selling some of his shares. I don't know. But it looks like all we're seeing broad selling here.
Steve, I did want to talk to you a little bit about what you think is going to happen here in the IPO market. I saw a couple, there's two health care companies that are going, but I'm hearing a lot of news that we could see somewhere in the vicinity of 50, 60 IPOs between now and the end of the year, which we haven't seen in a while. What do you think of there? What's leading to that?
That's an interesting point. I don't see that, right? I mean, you don't do IPOs in a bad time. When you see good, let's be honest, if you truly are seeing between 50 and 60 IPOs, that means that companies are feeling good about going to the markets and getting cash. But man, I don't know that I don't see what they see. I do like the markets, but I don't like the new IPO markets. Uh, yes, the fact that it's healthcare could be very interesting, and maybe we are seeing that. But no, I don't see the massive IPOs. We saw this before, and what we saw then was those IPOs that were coming, and then they pulled them out and said, no, we're not going to do them. The market just
And
isn't ready
that
for
was
it
going to be a
right.
question I was going to ask you. Do you think this is more of a test the waters, dip your toe in, say a few
Yeah,
things, and
I
see
do.
what happens? And then I was just also curious if maybe it's that a second part of that is like you said. I've noticed that they've mostly been healthcare companies. Are they having more trouble raising money on a private level, or is there just more appetite maybe at a retail level to get into that investment, and that's what they're looking at there?
Well, the IPO market is going after new money, right? And there's a lot of cash on the sideline. We talked about that for a while. The cash on the sidelines is just enormous. Even just ask Mr. Warren Buffett himself, right? The largest cash pile in history. But he's not going out there and buying healthcare, biotech stocks. You're not seeing that. So no, I don't think so. Wow, this selling is really rough here.
Yeah, I hate to say that I called this one, but it just what I've seen the last few days, man. It's just been a repeated, rinse and repeat the last 3 days. Um, you
And
know,
I think it's silly too, because quite frankly, I don't see this kind of, this selling here is not a rebalancing. It's just algos crushing and whatever. Let them do it because market only goes one way. Just your time frame is the one thing you got to worry about. Um,
absolutely,
as I
absolutely.
said, as I said this morning, I'm sitting on my hands today. I don't want to play this game. Um, Let them play the game because most people are getting hurt in this, and I don't want to see that. It's terrible.
That's a
I don't.
great advice that you just brought up. This is where, like, you got to learn to step back sometimes. This is where too many of my friends I've seen over the years get hurt because they just get impatient. If you're not looking at the market and you're not seeing what's coming, then you shouldn't be doing it. It's not a we have to bet today. We have to make this play today. There are plenty of days ahead, plenty of stocks to look at, and sometimes you got to let this craziness play out. Look at that,
Yeah,
Tesla just down at 225 now.
and
I
you're
mean, it's
seeing it.
just madness.
Yeah, you're seeing it right now. We talked about this before. Cocoa now being up almost 3%. Commodities are going to do very well in this type of environment. Look at that bounce right back to 106 on Nvidia, like boom, boom, boom. That's algos, and I'm not a computer. I may look like one. I may not uh, talk like one, but I don't. I'm not going to fight the computers. I never have. See, look at the bounce and the tick. It just dropped for no reason. There's no news out. It's just literally algo trading. So I'm look. I'll sit back. That's not a big deal. I'm okay. I'll watch this.
Right. I like to watch it out, watch what's going on. It's just a tough to trade. SPY trying to stay positive here. It's trying.
Bond market jumping a bit here too as well. 3.75.
The Dow is up, almost half a point here. Well, let's see what we've got on our early market movers here. WH Wheeler Real Estate. Oh, I actually had that pulled up 100% here today. Again, like we talked about, there's just some of these small market cap stocks. Right now, that has 15.78 million in volume today. Their average volume is 3.65. We are 14 minutes into the trading day. These are the things we're talking about. BLMZ, Blooms, up 130% and still running. And if you look right below Steve here on your screen, you can see what I'm looking here at. The U.S. market movers, one of the widgets on the Quasar
Yeah.
Markets website. I love it. I use it here as a helper for what we're doing all the time. I keep it right below that heat map, so all I got to do is within the same thing, boom, come through here. What's scaring me is I'm starting to learn some of these symbols on these market mover micro pumpers because they're doing it so often. That's not a good sign, in my opinion. Big decliners today. Let's see what we've got. AZI, not familiar with that ticker myself. AutoZ, Internet Technology, down about 26%.
Seeing Warner Brothers Discovery WBD up about 2% here. We're seeing a lot of that happening in that kind of space. Talking about TV and streaming, Disney and Hulu and all of that. There's going to be some consolidation in that space. We talked about yesterday mergers and acquisitions. This is the time to do it. So I think you're going to see quite a bit of it.
I will say that Warner Brothers chart too. Again, if you can get above this 762, starts to look pretty nice for a move into that blue sky up here to the right. You do have descending channel in the linear regression on the hourly, but hourly linear regression breaks pretty frequently. I like it more on the 4 hour here, and you can see, yeah, you get above this here, you got some nice room. Steve, saw some interesting talk again on more of a macro level that these trading conditions as we come out of this time of high rates is something that a lot of traders that are trading right now haven't lived through. That this stuff is going to be more similar to mimicking what happened in the 50s and the 60s versus coming out of the 2008 economic crisis. What do you sort of think about on that sort of thoughts there?
Well, I wasn't born in 1950s or the 60s, so I have to, I think when you look at the markets in general, and you try to compare it to other decades, it's hard to look at a chart and understand it from that perspective instead of living it, right? I can tell you all about the 90s, the 2000s, and 2010s, and of course now 2020s. If I were to ask about all of this, I think it feels a lot like the mid 90s, when tech was hot, and there was a boom. But this doesn't feel exactly the same. It feels a little bit more tepid than that. The internet, computers, all of that fun stuff coming out, and then there was a crazy run for it. We're not seeing that, and we didn't. But we have to take out one thing. It's COVID is still affecting the markets, right? People are still thinking about COVID. You may not think about it personally in your mind all the time, but it's still there. You had 2 solid years of the markets were just irrational, or as Greenspan says, the market can be more irrational than you can be rational. Irrational exuberance, as he used to say. Uh, this is I think this is its own time frame. I don't think there's a time that you can look back and say this is a lot like that. I don't see that right now.
I think you're right there. What their point was is that where the similarities come is that the people, the investors in the 50s and 60s still had memories of the depression. I'm trying to pull up Fed Watch here. I'm seeing talk that Fed Watch here. So we're now seeing a change, Steve. Taking a look at Fed Watch here, if you look on my screen, it's now gone more people betting on the 25 basis point move than the 50. So we looked at this just a little earlier.
I still think it's 25, but there is a slight chance now it could go to 50. I've not seen well, it's Friday. It's the last day before the quiet period, the blackout period for the Fed. So let's see what they all have to say the rest of the day. They're also wreaking havoc on the markets too as well. Algos are picking up what they're saying. I don't know. I ignore the Fed like the plague. So do what they do and not what they say.
Yeah, I was just more interested in the fact that we had just looked at that literally 15 minutes ago, and it was the exact opposite picture. So you can see, traders definitely are, and I what this shows me personally, it's again, everybody's too jumpy. There wasn't much that changed on that employment report that would make it jump, in my opinion, from that to that to that to that. So that's where I think there's volatility and people can't pick up their mind. They're sort of, I think everyone's playing follow the leader. Seeing some analysts say that OPEC Plus has staved off an oil surplus this year by restraining production, but that temporary fix won't hold back the supply gut waiting in the early 2025 level. So not very positive for the price of oil, but well, it is positive for those of us that want to buy gas cheaper. Again, another analyst talking like you were about AVGO. They're in the driver's seat saying that the AI business is performing that they just, in their analyst reports. So we'll see that a lot today. The quarterly reports will start to get analyzed. I'll be interested to watch that AVGO because, what we saw in NVIDIA was that despair sort of went away and we saw positive trading until the insider selling news came out and the false news about an antitrust suit. So doing there. Seeing one of our friends talk about Chewy here being a ripe for
Huh.
a move.
Interesting you say that. We're now seeing a market watch reporting that a quarter or half point interest rate cut this month is now too close to call for the Fed. Wow.
It's amazing how, like I said, it doesn't. We can't keep a theme for more than 5 minutes here these days. I feel like the market's got ADHD today.
I called it this morning. Sitting on my hands, not worrying about what the Fed is doing, not worrying about because I think the algos are, and I also think this is all the first. This is a shortened week. It's a very short week, Thursday, 4 days, and I also think that it's a little bit of still of a hangover from Labor Day weekend. So traders needed a little bit of cash. Maybe they went out and partied a little too hard over the week. I don't know, but I'm not too scared.
No, no, not scared at all. Um, again, these are the things that most of us have been talking about for months. Nvidia though taken down 1.68. Tesla down 3% here. I'll be interested to see what Tesla does as it approaches that 219.94 pivot point that I have here on the chart. Break below that, you got some serious downward movement there. S&P 500 at risk for the worst week since April here, even as we're making these little gains. So, it's been a rough week. Seeing gold down a little bit here now too. So, metals moving in the wrong direction also. Bitcoin struggling to hold that 56K candle here. Sticking with my theme on the beverage industry, which I think will have a fairly decent quarter here in general, as what I'm seeing in restaurants and liquor stores. I'm seeing more business, and I'm seeing people that are. I'm not seeing a trade down in the liquor industry like we're seeing in a lot of different categories. When I talk to my friends that are still in that industry, the high end bourbon still selling, high end tequila still selling. We haven't seen the trade down. That's one that I usually look for the consumers and staples is when people are trading down from Jack Daniels to Early Times, when they're trading down from Woodford to your Jim Beams. But what we're seeing again is Brown Forman up about a quarter of a point here today. Constellation Brand is one of the largest wine companies in the world, up about 0.7%. Napa, which is Duckhorn Winery, is one of my favorite wineries. Looks to be finding a bottom here, up about 1%. Molson, another big brewer, Molson Coors, up about 0.7 here. So again, I do think that the beverage industry is starting to pick up. What I will tell you on those cyclical changes is now is when I start to tend to look at restaurants. So what do you think, Steve? Would you be looking at restaurants here as we get into the holiday season? People tend to go out more with families. I tend to look there cyclically at some of those restaurants, the Cheesecake Factories, um,
Yeah.
some of the other.
So my thesis behind the restaurant business is very clear. I think the lower end restaurants will hurt over the next 3 to 5 years. McDonald's will probably start to slip and fall apart. That's hard for me to say that being from Illinois originally, where McDonald's was born. But the truth of the matter is, with as weight loss drugs come in the market, as people decide to get more healthy over the next decade, they're not going to be eating that kind of food. And when you're on weight loss drugs, they're also eating less food, so that's a problem. But I think they want to eat more quality food, and so yeah, I think your higher end restaurants will do very well. I think Cheesecake Factory will do even better, to be honest with you. What I think your private labels restaurants will do even better. So I'm not, that's a very hard question, but no, people will not stop eating out in restaurants. I remember the first day after COVID, going to the first restaurant. I was, because of being in Florida, we were there before anybody else, pretty much. That Mexican restaurant tasted so damn good. Look, yes and no, but I'm not too concerned about the restaurant business. There are always going to be restaurants in the world of restaurants will just change over time, and
Absolutely. I agree with that. What I would also say to that is what I'm seeing here now that I lived in a weird spot in that DC isn't really has none of the national chains within the actual district borders. It's really independence. Now that I've moved to Ohio here for part of the time, what I'm seeing is small town America is where the expansion is for these companies. The Chipotle's, the Darden restaurants, which is your like you said, your Maggiano's, your Capitol Grills. They're no longer looking to build a third outpost in Tampa. What they're doing is they're building in Wesley Chapel, where you are. They're
yeah,
building in these suburbs. They're moving out into those areas. What we're seeing, in my opinion, is a change from the family restaurants that a lot of them went out during COVID. A lot of independent retailers had so much problems, and they're really being replaced by these big entities with private equity stepping in, and you're going to see more and more chains in theory, which is not necessarily a bad thing in my opinion. I am an independent restaurateur, so I do like the independent restaurants, but the chains do provide you consistency, comfort. But I do think that over the next couple of months, it's cyclically something I'll be looking into is the restaurant stocks. As we get ready to
yeah.
close down here, we are down now over 1 point on the SPY. Excuse me, on the Nasdaq down almost a point at 0.75. SPY down about 0.14. Dow Jones still is in a positive so far.
I tell you one thing I like here, and it's still pushing here. Now, it's one of my favorites is IBM, a big old blue. That has had a nice run since their earnings, and that's a good example of what happens. IBM got beaten up over their earnings a little while back, and still pushing higher. And guess what their big thing is? Watson X. They're still talking about AI. Do you think they've stopped talking about AI or stopped using it? Nope. Big Blue is looking pretty good. It's been a nice run here over the last few months.
Yeah, since that earning report, like you're saying here back in May, April, they have
And
been on a run.
their latest one gave them a little bit of a drop as well, and boom, right back up in new highs.
Yeah, IBM. I haven't looked at them in a while. We got to add that here to our watch list. Oh. Man, those semis still getting hit here. Nvidia down 2.25%, AMD down over 2%, Intel down 1.2%. AVGO now down 10% for the day here, Steve. Broadcom.
Yeah, I don't. It's too much. It happened to Nvidia as well. I don't like this. This is not right. It's people are just selling now to sell, if you look at your options volume, you look at the options chains, it's crazy. They're just pushing it now down for no reason. Um, yeah, it's. I don't like the guidance. The guidance was not good, but this is a broadening of selling, and it's really pulling the rest of the markets down, and it's it's not really fair to AVGO.
No. And you talk about outside influence, seeing a report from Bloomberg that Chinese banks have built $100 billion short against the U.S. dollar to prop up the yuan.
Yeah, we
Hedge
talked
fund
about that
hedge funds
yesterday.
are eager to get in on the trade.
Yeah, talked about that yesterday. Again, I'm not too worried about it. We're seeing some more selling here going on. Nasdaq now down about almost 200 points. Um, really, I mean, really, people, this isn't selling. This is algos, and I've said that now and then. Looks like it's happening. So yeah.
Seeing Bloom still taking off here. Micro pumper again. There's got to be some short cover in here today. Up 160% now. And it's still
I
got a
would like to
gap it
see
could fill.
the stop in the selling here in Bitcoin. It seems like there's some selling in Bitcoin, but yeah.
Take a quick look at that for you. Yeah, 55,692. We are towards the bottom of that bullish flag. We can't go down too far, or my thesis will change. Okay, we've hit the 10 o'clock hour here. Steve
Yep.
has to go do some work. I will be back with you at 11:30 for our lunchtime report, and then from 11:30 to 12:30. And as I said, at 1:30 today, I will be doing a half-hour show on Bitcoin to end our week. Thank you so much, Steve, for joining me this week on Quasar Live. You have a fantastic weekend.